All right, let's talk about investing. If you're new to this whole world, don't sweat it. We're going to break it all down and give you a clear, straightforward guide to get you started on your financial journey. Okay, let's dive right in.
And this right here, this is the big idea, the core concept behind everything we're about to cover. It's about flipping the script, shifting from you working for your money to making your money work for you. That's the real promise of investing.
And really, that's all it is. It's not some complicated secret club with a secret handshake. It's just a tool, a really practical one that anyone can use for one simple purpose: to build wealth. So, before we get into all the how-tos, let's start with what's maybe the most important part, the why. Understanding your own motivation is absolutely the first, most crucial step.
And here's the best part. It really doesn't matter when you start. Seriously, whether you're 16 or 60, the most important thing you can do is just begin. The sooner you start, the sooner you're on the path to hitting your financial goals.
All right, let's get a lay of the land. I want you to think of all the different types of investments, or asset classes as they're called, as different territories on your own personal investment map. These three right here are basically the building blocks for most investment portfolios. You've definitely heard of them: stocks, bonds, and cash. But what's the actual difference between them? Let's take a look. Okay, this might be the most important distinction to get straight. With stocks, you own a tiny little piece of a company. You're an owner. But with bonds, you loan your money out to a company or a government. So owner versus lender. That's the whole game right there. It's a huge difference. And trust me, the world of investing gets even bigger. It goes way beyond just stocks and bonds. You've got things like commodities, think gold or oil, real estate, even foreign currencies. There's a whole world to explore as you get more comfortable.
So now that we kind of know the landscape, let's talk about the rules of the road. I mean, every journey needs a guide to keep you on track, right? In investing, these core principles are what will help you make smart, sound decisions.
And here it is, the #1 rule you have to burn into your brain. Risk and opportunity are two sides of the same coin. The chance to make more money, to get a higher return, always, and I mean always, comes with more risk. And you can see exactly how this plays out across those main asset classes. You've got cash, which is super safe, very low risk, but it gives you a pretty low return. On the other end of the spectrum, you have stocks. That's where you find the highest potential for returns, but it also comes with the greatest risk. Bonds are kind of that happy medium. The key is figuring out where you're comfortable on this spectrum. That's how you build your strategy. Now, let's talk about what might just be the most powerful force in all of finance: compounding. It's like a snowball rolling down a hill. Your initial investment makes some money, and then that money starts making its own money. It just grows and grows on itself over time. It's incredible. So what does this actually look like in the real world? Well, let's say you invest $5,000. Then you just add $100 a month to it. That's it. In 10 years, thanks to the magic of compounding, your investment could grow to over $39,000. That is the power you unlock when you combine this principle with small, regular contributions.
So how do investors even make these decisions? Well, most people fall into two main camps. You got fundamental analysis, which is all about digging into the health of the company and the economy. It's focused on the why. Then you have technical analysis, which is all about studying chart patterns and market trends. That's focused on the what. A lot of long-term investors lean on the fundamentals, while short-term traders often live by the technicals.
Now that we've got the rules down, let's talk about a really popular vehicle for this journey: the exchange-traded fund, or as you'll always hear it, the ETF. So what is an ETF? The easiest way to picture it is like a basket that holds lots of different investments all at once. And you can buy or sell that entire basket with one click, just as easily as you'd buy a single share of stock.
And it's no surprise they're so popular. They are super easy to trade, incredibly versatile. You can find an ETF for just about anything, and they give you instant diversification. You know that whole don't put all your eggs in one basket thing? An ETF does that for you automatically. And the best part? They often have lower costs, which is a huge win for you.
We've covered the why, the what, and the how. So now, let's get to the most important part: how you can take that first step today. Here's a simple little checklist to get you going. First, just make a plan for how much you can invest. Second, commit to your education, and hey, you're already doing that by watching this. And third, keep track of your learning expenses, because some of them might even be tax deductible.
And to keep that education going, you should check out timeless books like The Intelligent Investor And just make a habit of reading major financial news. Your knowledge is truly your best asset.
Let this be your motivation. Seriously, just by starting, you are putting yourself on a completely different financial path. The person you'll be in 5 years is absolutely going to thank you for it.
So I'll leave you with this final thought. Take a moment and really think about it. What are your goals? What kind of future do you actually want to build for yourself? Because the journey to making all of that a reality, well, it can start right now. Thanks for watching.
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.